What's up, guys? It's December 14th, 2023. I think Bears finally got a nice day. Really good double top for them. It's pretty good sell. It was a leg one, leg two. Yesterday was pretty climactic. And now today we've got a double top, so market could be starting to pull back on higher time frames. Yesterday we had FOMC. Super tight range in the morning, and then we broke out for the last 2 hours of the day. It was about 60 points in 2 hours. Started at 11 to 1. That's pretty climactic. Nicest bars super late in a bull trend. About 65 points. Today we had a gap up, and then bar one was continuation. I thought that was good for the bulls, especially after I was already thinking yesterday was climactic. And with bar one being a full bull bar, I was like, wow, okay, maybe we are just going to keep trending higher. Bar two is a bear bar, so bulls are buying low, bears are selling high. The market is in a limit order market, and we can see that with bar three, they bought the low of bar two and reversed it all the way to make a new high close, not the high tick, but a high close. Bar four reverses bar three, and we're still in a limit order market right now. The markets are ranging. Bulls are buying lows. They eventually get a breakout into the EMA. I think this was a good one-to-one move right here. I didn't take this trade. Something like of this nature, you get out around the EMA. And turn on the bar numbers. Bar 6 sells off, and bars 7 and 8 start to break out. The bulls get a slight bounce above the EMA, but then eventually bears short right back into the EMA, this bar 14. When I saw bars 15 through 18, I was starting to think this could be a pullback and we make a new high from the bottom of the gap, 50% level. The idea I was thinking was that bears are failing to close below the 50% level, but they did close it here. So they bounce up, and I got filled here and took a small hit here. Bar 18 was a good time for me to get out. Usually on good stop orders, there's time for me to get out, and I did get filled on this level, so I did have about a little over 5 minutes to get out, and I chose not to. And I even could have got out on this bounce and this bounce, so I was being stubborn with that trade. Bar 20 looks like bears are trying to break out for a new low of the day, or at least tag yesterday's high. Right now, the market's in a pretty tight range for about the last 2 hours, so I was expecting a breakout on either side. 17-point range in an hour and 20 minutes. I mean, for 3 hours, there's a 17-point range, honestly. So it was really tight. After bars, so where are we at? Bar 21. Bar 22 is bad follow-through for bears. I think bulls are going to start buying their longs back because some bulls got filled here on this wick. This wick shows us that this wick is important. Bulls put a buy stop order here. It got filled, and they never really were making money. So unless they bought more lower, they can get out on this wick. They would have to take a hit like I did here. But the smart bulls put a buy order here. The market bounced past the 50% level, and they sold, or excuse me, they made money. I was thinking of the bears for a second. So bulls buy here. They're losing money. They get filled on this candle. They buy more. They put another buy order here. Market races up past the 50% level. They make 1 point, and yeah, they get out. And then that's what causes this. I think this is what caused this big bar to form, because I was watching this bar. I saw it race up, and then it started stalling around the previous high, and then boom, it just collapsed. So bulls were dumping their position. This was a break-even event for them. Bar 22 is bad follow-through, and the market goes range-bound right under the EMA. Bar 27, bulls break out of the EMA and go for 3 legs higher, and they get a wedge top right here. Leg 1, because that's the high, see? If we be like truthful about these leg 1, leg 2s, they are happening. I mismanaged a trade down here and had a greedy leg 1, leg 2. So I'm just trying to be not greedy anymore and put the pullbacks where they start, and it always lines up. It doesn't always line up, but it lines up way nicer than it's not. So here's that wedge top I was looking at, and I thought this was a really good trade. I got short on bar 41 because I had this as the high of the day, and then bulls I was counting leg 1, leg 2, and then 3 pushes higher as a wedge top, and it was a wedge top into resistance, and the market previously sold here. I got short on here as for a breakout trade because this bar was bigger than the previous bars. It was sold for 3 legs down, leg 1, leg 2. I got out as we were stalling around this level, and I got short again here because this was a nice breakout and I expected a leg 2 move. However, I completely fumbled the bag. I did it like this. I don't know why. It's crazy because it really should have been like this. Look at that. That was met. So yeah, really good day. It ended up being a really good day for day traders and bears, not people who buy. I don't know. I'm not gonna speak on them. Anyways, so leg 1, I was gonna say like stocks who buy and hold stocks, they could buy more down here. Leg 1, leg 2, and then this could be a second leg trap within a range. Bar 53 came right down to this previous bar here. It kind of created a double bottom, and with the bears' risk being so open, they have to take profits soon, so they start to buy back their shorts, and we'll see this and start to buy back for the reversal. Then they get 2 legs into the EMA. Bar 54 to the high of 55, and then the low of 58. I think was a pretty good 2-legged trade. My entries I didn't take this trade, but my entry would have been somewhere here, so I would have been late to the move. I think the key is starting to learn how to get these sneaky entries here, learning to set limit orders here. I'm going to mark out some gaps because I've been practicing them. I practiced them last night. I kind of get a better understanding for them now. Micro gaps are important. So we do the bear micro gaps. Here's a bear micro gap. I do it. That's a. Here's the bear micro gap. I try and do 3 bars and then put a gap down. So here's a bear micro gap. Because I want to start measuring the strength of the markets correctly. I don't know if I'm saying this right, and I'm still practicing these. So this is a micro gap here. I'm doing about every 3 bars. So 1, 2, 3, and this is all taught in the Brook's price action course. It's like the first lesson. I really recommend you guys get that course if you guys like my channel. I know a few of you are coming back now. A couple of you already have the course, and you guys are straight up in the trading room. That's great. But if you guys are learning stuff, I recommend getting that course. It really changed my perspective on trading for the better. I was kind of wandering around aimlessly, and then I found Al Brooks. I joined the trader room, and I'm not profitable by any means. I still have to take some nasty hits, but they're happening less frequently, and I have a better understanding for the markets now. I'm still learning, though. I've been through the course a couple times, 2 times front to back, and now my 3rd time around, I'm skipping around, like, depending on what type of day we have, or I'll, like, watch the whole market cycle, things like that. But I really recommend here's another gap. So you see how these gaps start to stack up. Here's another gap here. Course is challenging. It took me a year to do it this many times. I bought it. I've had the course since December 20th. I got it. I bought it on December 25th, but I started it on January 1st. It was like I had some money for Christmas, and then I was like a New Year's resolution, so that's how I know the dates. And yeah, it's been sweet. So this January 1st will be a year of studying Al Brooks. Been crazy fun. I don't really talk too much in the trader room, but there's really nice people in there, and they talk. They're cool. So here's kind of like the micro gaps marked out, and this is just measuring the strength. If you can see here, when the markets were range bound. You know what's crazy? I didn't even measure if we got a breakout of this range. I don't know why that didn't occur to me. We did too, yeah. So leg 1, leg 2, or a breakout kind of worked. The leg 1, leg 2 was a little more accurate. Because if you did the breakout of the range, your limit would be set here. If you do leg 1, leg 2, your limit's set here. So that's nice to know. I thought the markets honestly would have tagged this right here. That's kind of how I got greedy and trapped, and I measured greedy way. Anyways, back to the micro gaps. You can see in the range bound environment, the gaps are getting closed. I marked these gaps out, but they got closed. They got closed by this bar. This gap gets closed here. This gap got closed there. However, this gap starts to stay open. And I mean, there's another gap right here too. You could do that. And all these gaps add to the selling pressure. Here's another gap. So yeah, I'm trying to train my eyes now. I'm starting to realize like a lot of little things. I've been watching a lot of Ali on YouTube. He talks about how to study, and there's a page on Brook's website written by Ali on how to study. He talks about studying intentionally, so I'm going to start trying to do that with like gaps, and leg 1, leg 2 is going to be my main focus. Because I think if I can read a leg 1, leg 2 and measure it through gaps, that's fuego. Oh man, that looks crazy extended. Here, okay, here's a daily breakdown. I swear I deleted this. Let me save it. So yeah, we can see a leg 1, leg 2, leg 3. We've been talking about that one for a while. Today, I mean, we all saw the inside of that bar was a pretty nasty sell. Maybe they get some sort of continuation. I do think this really damages the bull case, as this can be I forget the word now. There was a word like this is a bad way of saying it, but like it's like the black eye for the day. Like it's the obvious thing. It's a determining factor. I don't know. Something like this is screaming something's changing. Double top into a very heavy sell. I don't think we've seen bars like this that haven't, like when we see these kind of bars, they've been more so a sell vacuum. That's why I got out here. But then as these bars got put in, I was like, oh, we're going for the leg 1, leg 2. And I got a little greedy. There's the gaps. So yeah, 3 legs up, and now we know this bar. Oh, that doesn't even look good on the hourly chart. It'd be interesting to see if we come back to the 50% level and sell off, maybe in the overnight. Oh, the overnight session's already open. Hold on, let's do a little bing bang here. So we're kind of already at the 50% level. That's a super bad drawing. Yeah, so if there's maybe bulls try and fail at the 50% level and they start to sell into the EMA, maybe not all in one day. That would be a pretty harsh sell. How many points is that actually? Oh, that's only 30 points away, 40 points away, and with like, that's like 20. I don't think that's crazy. I mean, I don't know. The volatility is definitely picking up. We can see I kind of got shredded a little bit because my stops were way too tight, so I have to adjust my position size. We went from a low volatility, and now the stops and everything is a lot bigger. So maybe lower your position size. I learned that one the hard way today. Hit the follow button if you guys are learning. If you guys share price action, hit the follow button. I drop these videos every day at 3 p.m. It's the Emini breakdown. Drop some comments. Tell me what you guys are up to. What are your plans for the year? I'm honestly very close to like probably going to take a week off and just study and get really prepared for next year, because with these, you guys know I'm trading Apex accounts, and 5 points a day is $250. 4 accounts, 5 points a day is $1,000 a day. So I'm trying to gear myself for that instead of. I've been looking for these type of moves, and I think there's nothing wrong with that, but these are the outliers. Whereas, look, 5 points here, 5 points here, 5 points here. If I just catch one of those with multiple accounts, that's $1,000 a day. So I'm trying to think in that manner, which is why I'm still sticking to the 5 points a day thing. But yeah, hit the follow button. Let me know what you guys are doing, what you guys are studying. Have a good day. I'll talk to you guys tomorrow. Have a good weekend. You guys will be seeing this on Friday, I think. Talk to you guys later. Bye.